Hey everyone, welcome back to Corporate Decoder, the place where we break down the confusing world of corporate filings, and today we're diving into some update from Medical Properties Trust. Get ready to decode some important news that could signal a shift in their strategy, kind of like finding out your favorite restaurant is changing its secret sauce recipe and you're not sure if it's for the better or worse. So what's the big deal with this particular filing from Medical Properties Trust, or MPW, as they're commonly known? Well, it's an 8K form, which basically means something significant and unexpected happened that the company needs to tell everyone about right away. Think of it as a company's immediate public announcement of a surprise. Medical Properties Trust Inc. is primarily a real estate investment trust, or REIT. They own and operate healthcare facilities, basically landlords for hospitals and other medical places. They've been around for a while and their business model is deeply tied to the healthcare industry and the companies that run these facilities. What's really noteworthy in this particular 8K is that it's talking about a previous action from June of last year, when MPW and its subsidiaries filed a registration statement. Now, a registration statement is a document that companies file when they want to sell new securities like stocks or bonds to the public. It's a big deal because it signals they're looking to raise money or make some sort of financial maneuver. And the key piece of information they're updating in this 8K is related to the US federal income tax considerations. This is like getting a revised instruction manual for how taxes will work for certain investments. When companies update this section, especially for a registration statement, it often means there's a change in the tax implications for investors or for the company's own financial structure. It's important because taxes can significantly impact how much money an investor actually keeps from their investment. Honestly, the filing itself from MPW doesn't contain extensive financial tables that show performance changes in this specific document. It's more of a notification about an update to a previous filing. However, understanding the context of why they would file an S3 and why they are now updating the tax considerations gives us a lot to think about. Think about what drives MPW. They lease properties to hospital operators. If those operators are struggling, it impacts MPW's rental income. If the healthcare sector itself is facing headwinds like changing regulations or reimbursement rates, that also indirectly affects MPW. They are, in essence, a very important but sometimes overlooked player in the healthcare ecosystem. When their own financial structure or tax approach changes, it can ripple downstream. Now, let's think about the implications of them updating tax considerations for a registration statement. This could mean several things. Maybe they are planning to issue new debt, or perhaps they have made changes to their corporate structure that alter how they or their investors will be taxed. For investors, this is crucial. Different tax treatments can mean a significant difference in the actual return on an investment. For instance, if a change leads to a higher tax burden, it's like taking a chunk out of your profits before you even see them. This update to the tax section of their S3 also suggests that MPW is actively managing its financial and legal framework. Companies don't typically make these kinds of updates unless there's a strategic reason, and often that reason is related to optimizing their financial performance or preparing for future growth or transactions. It's like a chef tinkering with their recipes, not just for taste, but also for efficiency and profitability. What does this mean for MPW's overall direction? Well, it signals they are navigating a complex financial landscape. Their business is inherently sensitive to interest rates, as REITs often use debt to finance their properties, and rising rates can increase their borrowing costs and reduce profitability. They also face the challenge of managing their portfolio of properties and tenants effectively in an evolving healthcare industry. We need to remember where MPW operates. They own a significant number of hospitals across the United States and internationally, and their tenants are massive hospital operators. If one of these major tenants faces financial difficulties, it can have a substantial impact on MPW's revenue. This filing, by focusing on tax matters related to a fundraising or securities issuance, suggests they are potentially looking to strengthen their financial foundation or provide more flexibility for future investments or restructurings. So what's my take on this particular filing? Well, there are no hard financial numbers to crunch in this specific 8K. The update to tax considerations for a registration statement points to active financial management and potential strategic moves. It tells us that MPW is not just passively collecting rent, they are strategically positioning themselves, and clarity on tax implications is a fundamental part of that strategy for any publicly traded company, especially for an organization with significant assets and a broad investor base. It shows they are mindful of the fine fine print that can dictate investor returns. Looking at MPW from a broader perspective, they've had a mixed bag recently. A lot of market chatter has been about their tenant concentration issues and the financial health of some of their key lessees, particularly Steward Healthcare. Reports emerged about Steward facing significant financial distress, which, if true, would certainly put pressure on MPW's rental income from those facilities. This is where the real-world impact comes in. If a tenant can't pay rent, the REIT's income drops, and that affects everything from their ability to pay dividends to their own borrowing capacity. This filing, in a way, is a piece of the larger puzzle of how NPW is handling these operational challenges. By focusing on tax implications related to their securities, they might be preparing to refinance debt, issue new equity, or perhaps restructure some of their agreements to better weather the storms faced by their tenants. It is imperative for investors to understand these moves because they directly impact the company's stability and its future ability to generate returns. Therefore, while this AK may seem technical, it's a signal. It's telling us that MPW is actively engaged in managing its financial structure, possibly in response to the broader economic and industry pressures it faces. The key takeaway here is not just what the filing says, but what it implies about the company's ongoing strategy and its approach to financial stewardship in a challenging sector. Alright, that's our breakdown of this particular update from Medical Properties Trust. What's your take on these strategic financial moves and what they signal for the company's future success, especially considering the pressures within the healthcare real estate sector? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out the Discord in the description for more community discussion and analysis. Thanks for watching. See you next time.